Good morning, and welcome to episode 59 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, January 12th, 2022. Over the past week, Omicron variant has dominated the headlines with hospitalization rates at the highest level seen thus far in the pandemic. There is some bright news on the horizon. First off, it looks like indications are that the variant is peaking in the UK. They feel that that may soon happen here in the US as early as, say, the 19th, about a week from today. And although the rates of infection are incredibly strong, thus far, it seems that the impact on those who catch the Omicron variant is less, the symptoms aren't as severe, and it's passing and people are surviving. So those are all positive things. Fingers crossed that we put this behind us sooner than later. Yesterday, Federal Reserve Chairman Jerome Powell had his renomination hearing, and he gave testimony to Congress. At that time, it really wasn't much of a renomination or a job interview, if you will. Rather, they used it as an opportunity to get a pulse for what the Fed chairman intended to do this coming year in terms of tapering, interest rate increases, etc. As you can remember, the Federal Reserve notes from the last FOMC meeting came out and that roiled the markets. Both the stocks and precious metals suffered as a result. As you can imagine, Jerome Powell stated that getting past the pandemic was the number one thing for the economy, and in his mind, it's because the pandemic caused the inflationary pressures we saw last week. You know my thoughts on that. The pandemic didn't cause it. The government's reaction to the pandemic is what caused the inflation. He did mention again yesterday that they had misjudged both the breadth and the duration of inflation. He said it would be sticky and it would be with us well into 2022. He reiterated their plans for tapering to stop asset purchases by March and to do 3 to looks like now 4 interest rate hikes in 2022. The way he said it, I guess, was a little bit more dovish, and the markets were happy as a result. We saw the equities surge, as did the metals yesterday. The dollar did not fare so well. It dropped a bit. Let's take a look at the prices over the past week. Gold today is at $1,818.70. That's down 0.1% from last week at $1821.40. Silver is down 1.5% this week to $22.82 from $23.16 last week. Both platinum and palladium are down 0.75% this week. Platinum is down to $9.80 an ounce from $9.88 last week, and palladium is down to $1,997 an ounce from $2,014 an ounce last week. The gold-silver ratio, the number of ounces of silver it takes to buy 1 ounce of gold, is right at the magic number of 80 this week, as silver fell a little further than gold. That's versus 78.94 last week. And as I mentioned, the dollar's under a bit of pressure. It's at 95.66 this week versus 96.09 last week. You know, it's funny how we can say the same words, meaning Federal Reserve Chairman Jerome Powell can say the same words as he did during the FOMC meeting. Yesterday it seemed dovish. A few weeks ago it seemed hawkish, and the markets respond differently to this exact same words. Folks, this is just crazy. The safest thing you can do is put your money in gold and sleep nights. It is the long-term protector of purchasing power, has been, will always be. Okay? As always, we like you to like us and subscribe to us on the YouTube channel. Leave your comments so we can address them on air. Go ahead and follow us on all our social media for Asset Strategies. Sign up for our alerts in our newsletter. And don't ever forget that getting rich starts with keeping what's yours.